Good afternoon, blockchain experts and enthusiasts. My name is Aliona Zaleskaya. I'm director at WeTel Blockchain Center. As we all know, we are in the middle of the fourth industrial revolution right now. That means that all industries and all organizations are thinking how to embrace new technologies like artificial intelligence, virtual reality, robotics, Internet of Things, to make their business more efficient. That means that people with blockchain knowledge is on higher demand now. But do we have enough knowledge of it? Here today, we are going to discuss how to bridge the gap between technology and society. And I'm delighted to introduce our today's experts. Mayova Adenle, crypto analyst and blockchain enthusiast. Vakas Nakwa, founder and CEO of Aquachain, and Oliver Wolff, co-founder and CEO Helion Ventures. Thank you for joining us today. Can you tell to the audience a few words about yourself and your area of expertise?
Okay. Hi everyone. My name is Adenle Mayowa. I'm crypto analyst for a startup project here in Dubai. And I'm from Nigeria and been in the crypto space for more than 5 years now. So,
that's great. Perfect. Yes, please, Vakas.
Hi, my name is Vakas Nakwa. I'm the founder and CEO of Aquachain. We also run a venture studio called Smart Chain. That happens to be, we happen to be in the blockchain space for about 4.5 years now. We've successfully completed about 35 blockchain projects and crypto projects during this time. And we aim to actually work on multiple blockchains and create world use case products.
Great.
Hi, hello. My name is Oliver from Wolff. Thank you very much for the invitation today. I'm co-founder and CEO from Helion Ventures. It is a DIFC-based venture capitalist. We're also doing venture building. My background is banking and real estate original. 2019, I switched then to the blockchain crypto industry, first in Germany. We had a lot of regulated products on the German stock market, which we brought, a lot of topics there. Then I came to Dubai. I was co-founder from Crypto Aces here in Dubai, managing director for CVVC from Switzerland here, and then I decided at one point together with my partner that we're trying to do now our own company here in the DMCC.
Blockchain technology is not new technology, right? But for more than 10 years, and even nowadays, for many people, it's equivalent to just crypto. So how and when did blockchain have emerged from the shadows and become more famous? Who can answer this question?
Oh, well, I'll go first.
Yes.
I would like people to know that blockchain and crypto are different. No, because there's this misconception that crypto equals to blockchain and blockchain equals to crypto. Blockchain is the technology that fuels cryptocurrency. However, it can also be used in other businesses as well because it's an emerging technology and it has a lot of use cases when compared to just only cryptocurrencies.
If you look in the long run, there have been valuable products being created over a period of time that clear these misconceptions. But at the end, if you see, even if what has happened earlier in yesterday with the Ethereum merge as well, if you see, today Bitcoin has emerged as the single decentralized digital asset in the world today. So there is no two facts about it that we have been introduced to the blockchain technology because of Bitcoin. If Bitcoin was not in existence, then most likely the understanding of what we're doing in the whole ecosystem of blockchain would not have been there. So either ways, if you say that, Bitcoin is a byproduct of the blockchain technology, but at the same time, Bitcoin is what has given the financial freedom or the control of the mechanism of creating valuable monetizing assets or monetizing products in the
True.
blockchain industry. So both of them go hand in hand. But yes, we've now come to a stage where we are looking more far beyond than Bitcoin and evaluating ourselves in the technology in itself.
Absolutely. It's now we are just trying to figure out how to emerge this technology in our daily life. So one of the main features why we admire blockchain technology, it's because it's decentralized, but we can see that a lot of movements from different governments to regulate this technology, to control it, to centralize, to provide the proper licensing. So if we come to UAE, how are the central authorities adapting to blockchain and crypto from a legal perspective? And what are the challenges that they're facing? Vakas.
So again, one of the underlying terminologies that we use a lot with blockchain is decentralization. But we also have to understand that decentralization is not the only imperative solution that we have from the blockchain technology. Now, blockchain can be used in the public network, where it is definitely decentralized and it's a distributed ledger. But at the same time, blockchain can also be used in a private network. So governments and authorities which hold sensitive information definitely do not want to enter the public domain, and that's very valid that they have to actually take their necessary precautions. And most of these authorities and these institutes have actually gone ahead and implemented private networks. Banks have implemented private networks, so where they are securing their data over the blockchain by distributing the ledger and actually creating a more secure and virtual private network in itself. So it does not necessarily have to be decentralized. But when it comes to a retail segment, when we're talking about retail public, then yes, at certain stages, in certain industries, in certain protocols, we would want to have control over our data. But at the same time, when it requires governance, when it requires protocols from sensitive authorities, then yes, some data should not be in public domain. So centralization over there is very valid and requires. Now, even we have exchanges which are centralized. We also have, I mean, if you look at now, like I said earlier, that Bitcoin today has emerged as the single largest decentralized digital asset. Now, Ethereum was the second most decentralized asset, which now has come into a purview of a complete centralized infrastructure by moving from proof of work to proof of stake. So decentralization and centralization, this war or this kind of cat and mouse game will definitely continue, and it will continue in the long run. But decentralization is not the only key. I mean, in certain areas you will need to centralize, and you will need to have governance and protocols, and you will need to centralize the whole infrastructure. So centralization does not stop you from going into the blockchain technology, but at the same time, it's about understanding the legal perspective and the legal purview where you need to decentralize and where you need to be into a centralized infrastructure.
We have to give room for regulations from the various authorities, because at the end of the day, this is a central authority, and this is what they have in mind. They have the best of interest of the public in mind. So in order to give room for total adoption, we have to accept regulations from the authorities.
True, but if we're talking about UAE, so which steps the government is taking to centralize and to regulate the blockchain technology?
So I think blockchain is very adapted already by the Dubai governments and UAE governments, and you see this in many cases. Yeah, maybe not finally, but I think they're in a very good process of getting most of their things on a blockchain. So Dubai adopted blockchain in a very early stage, and if we look to Dubai over the last years, it came to kind of hotspot or capital city of blockchain crypto
Absolutely.
in the world. And the reason for that is very simple, because Dubai provided, the UAE provided the three key factors of developing like an industry. This was capital on the one side, it was infrastructure, yeah, and on the other side, human capital. Of course, we had COVID between, so a lot of people came to Dubai, a lot of capital came to Dubai over the last, let's say, 1.5 years. but put more a bit oil in the fire, let's say, at the end. And I think now the VARA regulation, what they're just trying to implement now, is a logical result of the situation what we have here in Dubai. And I'm very happy that Dubai is the first Emirates who going the step to trying to find the regulation in this. And if you look a bit more inside of the VARA regulation, I think it's done in a very proper way, because they are somehow the first one. So there's no blueprint what they can take in the world. So, and I think that's very brave to do this. And I'm very happy to see from an investor side that one part of this regulation, or for what VARA will be responsible, are the protection of the shareholders. If you look today to Dubai, around 11% of the population have been adopted Dubai or have experience with cryptocurrencies. And I think that's a good basic to start. For me, the big step will be when the institutional investors will adopt blockchain and crypto, like the banks or family offices, yeah? And I'm really looking forward for this. And so I'm happy about the situation, market situation in which we are at the moment. Not that because people lost their money, no, because just it's now time for the regulations on the one side, and also to clean up a bit the market.
Yes, I believe we are all waiting for that. But talking about the COVID, during this time, there started a lot of buzz around NFT and metaverse, not about just cryptocurrency. But still there are people who even don't know what NFT means. So let's talk about little bit about it. So what is NFT and what is the main usage of it?
NFTs stands for non-fungible tokens. So it's just practical example is let's say we have $1 anywhere in the world, $1 equals to $1. But with NFT it's different because it's non-fungible and it's very unique. And it's this uniqueness that is brought into blockchain. So we have different usage of NFTs. NFTs can be used in arts, in music, in real estate actually, because whenever we have this asset, we can mint them, and by then it is recorded in the blockchain and it is not changing.
The understanding of NFT from the community where the crypto holders come, it's very much clear. But when you talk to a layman, then NFT is something which is non-tangible at the moment. So real people, who are in the real economy. When you're talking about the real economy and the virtual economy, right now NFT is a product of the virtual economy. So people who are now still in the real economy are not understanding what is the real use case of an NFT, or what NFTs actually can do. Now with blockchain and with Web3 coming into picture, the virtual economy has taken a very vast boost, and because of which monetization and commodity creation in the virtual economy has taken a leap forward. Now, if there is a commodity that has been created in a virtual economy, how do you actually get a proof of ownership? So that's where the NFT actually comes in place. So the NFT actually guarantees you a proof of ownership on a digital asset. Now, this could be anything that could be virtual. It could be a normal commodity, normal asset, anything that has a presence on the internet or the virtual existence can actually be you can create an ownership over there through NFT. It has taken the first immediate step, where the immediate step to actually get ownership was art, basically. So because we were able to get the physical form of the art, and then you create a digital form of art as well. So that's what actually boosted. And then you had these CryptoPunks, Bored Ape Yacht Clubs, and a lot of memes, and Mickey Mouse and Donald Duck actually come up and create a lot of NFTs. But then the underlying technology use of an NFT is far more beyond just images and pictures. So there is a real life utility on NFTs as well.
A lot of scammers in the NFT domain, especially when it comes to the art NFT. So how can really professional artists can protect themselves in the world of scammers? So what they can do?
Scammers will always want to take opportunity of naive people who are not going to do their research and just run behind things. And in the virtual economy, or whenever you want to buy, even if it's, when you're buying mutual funds or you're buying stocks also, there's an asterisk mark that you need to do your own research, and that comes with virtual economy products as well. When you're buying an NFT, when you're looking at NFT, you need to really do your research, and you just cannot run behind things in the direction of where people want to run. So understanding in terms of what you want to buy, understanding the utility of a product, that's very important. So if just because my friend is buying an NFT, I shouldn't be buying that NFT, because if your friend has a utility of that NFT, then yes, if he's more of a yacht goer and if he wants to buy a NFT, then yes. But if you're not a yacht goer and you don't find yourself in that particular category, then that NFT doesn't belong to you. So where you see a utility, where you see that this NFT is going to bring value to your investment.
I think a lot of people are very naive because they hear from friends how much money they made, or they are in some, I don't know, fancy Telegram groups where people offering them 400 profit per day or per month or whatever. Yeah, and then they're investing in it and they lose it, and then they are ashamed to tell it. My recommendation for everyone who got scammed, he should tell this and should pull it out, because it protects other people not to lose their money and to make the same. And it would also help the community maybe to get a bit more serious. So, and of course, we as, let's say, institutional investors, we are very much focused on a proper due diligence. So not only of course, we're listening also what friends saying to us. I'm not saying everything is wrong there, but just we have to do a proper due diligence because we're investing money from other people. So we have a high responsibility here, so we need a proper due diligence here. How this works, if someone is interested, I'm happy to explain it, yeah. Otherwise, from the NFT sides, a non-fungible token means always it is something unique. And now every people in the world thinks he has something unique to make an NFT. I mean, that's very good for the industry, but it's not really a business model. So you have really to prove at the end what is really a business model, what is really valued, and what really should be put in an NFT.
So if we are talking about the business model, what can be the utility of NFT? Where else we can use it?
NFT would be perfect for cinemas, for example, for an entrance card for Qatar or wherever, because it's a unique ticket, let's say, a document, and only the holder of these tickets, who is also like named in it, can enter to this game. So we have no secondary market, for example, for tickets.
Actually, adding to this point, NFTs can create a more secure and safe environment as well. I'll give you a small example. You have a concert in Dubai, and people are still printing paper tickets. And when the concert goes sold out, you're still having people selling tickets on Dubizzle and going on these other websites and selling tickets. But there are so many people who are just duplicating this and selling scam tickets. You take the ticket, you go to the counter, you put it on the barcode scanner, and it doesn't scan. Why? Because it's a scam ticket. You've been scammed over there. So people are scammed in the real world as well, right? But the NFT here will actually save you from getting scammed, is because you're going to buy something which is more authentic and unique, which will allow you to buy a genuine product.
NFTs can also be used in real estate as well. Proof of agreement. It can be when a property has been acquired. The proof of agreement, it can be in form of NFTs. And one thing about blockchain and NFTs is because there is a proof that a record that records all the transactions that have happened with the NFT, with the real estate for a property from the point that it has been created all the way down to where it is acquired. So there's a proper documentation on the blockchain, which makes it very unique, and the transactions are very safe. So it can also be used as in form of a real estate as well. And also in music and in music as well, NFT can be used in music as well for creators, for artists. So it helps them to get the value of their music, the value of their creation, compared to when there's a third party. So when you have an NFT connection, you can give it out to your fans, and then they can easily just stream your songs, and you get rewards directly. So it will also be used as well. And then to answer your question about how professional artists can, what they can do about scammers, basically it's up to NFT marketplace because they should develop a tool that will be able to fish out scammers because at the end of the day, anybody can create NFT, right? But there's something we call verification on these marketplaces. So it's up to the marketplace to verify these artists. So people will know that their creation is the genuine one, not the scammers ones.
Yes, thank you so much for your answers. You was mentioning real estate. As we know, it's one of the high volume segments which attracts investors from all over the world. So let's talk about real estate and regulations for buying property in crypto. Does UAE accepting now as mode of payment crypto for real estate?
See, there's a thin line of saying accept. So, according to the central bank, crypto is not regulated. But that does not mean that it is not allowed. So, it is not regulated, but it is allowed as well. I mean, it's not that it is not allowed, it is allowed. But then you need to have a certain channel, you need to have certain licenses, you need to have certain process. So the developers are accepting payments in crypto, but they're not accepting it directly. All the brands are accepting, but they have their own OTC desk, they have their own channel partners through which they go to the process. Now there is a process that needs to be, because real estate is a very highly regulated industry. It has to be regulated because it's very easily inflatable and deflatable as well. So you can get a deflationary market in real estate very soon, and it can bubble up into inflation as very fast, as you know. So that's why real estate is very highly regulated, and because of the volume of the transactions that happen. So in real estate, you have a certain parameter where the DLD is actually requiring a proof of transaction to happen between the buyer and the seller. Now, the government is still not equipped to record crypto transactions, and that's why they have to be managed in a different way to third parties. However, it's not that it is not allowed, it's banned or anything, but currently it's not regulated. And the first step of regulation that has come up is from DLD, is that they have now asked for all transactions which are above 50,000 dirhams to be recorded with source of funds through brokers and dealers and developers themselves as well. So I think there is more to come in terms of regulations per se, but at the same time, you can come with crypto and buy a property in Dubai, but at the same time, there are other means that have been developed as well. We've been working in this sector for quite some time, and there have been inroads since the time we started till now, that we've seen that there has been a huge transition from where we were about 4 years back and now. So, and when you talk about crypto, then there's a lot of transaction that happens in stable coins. Purview is because predominantly you see that, it's not a volatile asset, and if anyone still wants to trade in Bitcoin, then that would be a very people who've bought things with Bitcoin are still crying today. So you wouldn't want to buy something with Bitcoin unless and until there is a huge emergency that you would want to do, if someone's holding that much amount of Bitcoin, which is the value of a real estate for that matter of fact. So yes, I mean, stable coins, use of stable coins. Again, all governments are also coming up with their CBDCs, which is the central bank digital currencies. They have their own mechanisms to actually implement this. UAE has actually gone ahead, and they're working on their own CBDC plan. They're working with Saudi actually to actually create a remittance CBDC plan where international remittances can go through this CBDC. So if this CBDCs actually are to be implemented, then we will be looking at more and more crypto transactions to be regulated, and more and more crypto transactions to actually happen in real life then.
Principally, you can pay in cryptocurrencies here in Dubai. I'm not sure. I think it was Namak who had like 200 million got paid in real estate already last year, or beginning of this year. This I don't know exactly. Around 200 million in cryptocurrencies. But the problem here is, I mean, you can also go and buy your Maserati in crypto. Yes. Yeah, so they're also taking crypto meanwhile. But the problem for them is that, for example, I come with my wallet and I want to pay in Bitcoin. Yeah, so, and I say, look, I transfer this to you, then the transfer is not immediately. It takes 4 or 5 minutes. Yeah, and this time gap, and then you get the Bitcoin, and then still he had converted to in fiat currencies, and then maybe he loses there, and it's going up and down. So, but he actually, especially here in Ventures, we together with our partners Masari and Quantify, we developed a product where you can really go and you tap, and it's not taking 4 or 5 minutes. It's taking maybe 5 seconds or something.
Maybe even less.
Yes, exactly. And we just are in the stage to public it and to bring it here to the market in Dubai. So there are already like blockchain technologies here for this kind of topic. So I think cryptocurrency will be sooner or later, let's say, hopefully soon than later, be full adopted as payment system, especially in the UAE and also in other countries. So digitalization of assets, especially real estate, is a completely different topic. The problem with digitalization of real estate is that each building, each register, each country has their own regulations, and it's very difficult to build a platform where you can adapt this. So most likely what's happened is, or the most business concepts are, is of to digitize or to tokenize the income, the cash flow of an asset. Yeah, that's much easier as to tokenize the assets by themselves. So, and for that, I think we are on the way to this. There are a lot of startups who have business concepts about this, yeah, and platforms, but we are not in the stage really to tokenize assets. I know there are some projects which going very well and they really work hard on it. So I'm sure we will see it in the future, but at the moment, I think it's very difficult.
That's true. Thank you so much for answering. I wish we have more time to discuss it further because it's such an important information. But we have our audience, and I would like to ask if anyone wants to ask a question from our experts.
What do you think are practical methods of creating a buffer zone, or whether it should be regulatory overseen, or whether it should be company-led in the economy itself? Saying we are prepared to take a 5% drop in our profits just to take this transaction within a 24-hour window, and consumer rights, because we want ultimately the public to develop trust in this as a system of barter, so that they don't have to spend their valuable Bitcoin, but might, look at the current values of stable coins or the various coins on offer that day. So it's an entire new framework for everyone to get used to. But have you had any thoughts on this so far?
First of all, digital assets, if they're not volatile, they're not very friendly for traders. So, and digital assets are not created for payment mechanisms. We are using it as a mechanism. Like, for example, even Bitcoin was not created as a tool for payment transactions. Ethereum was not created for payment transactions. Even any other digital asset that was not created for that particular reason. However, because of the growth that it has got in the last few years, it has gained in value, and because it has gained something in value, then it becomes as a medium of payment. However, today you don't go and tell anyone that I want to buy something with gold. However, gold is also volatile. Gold is also having its own value in terms of appreciation and depreciation, and because of that, when the evolution of time moved from physical assets to something valuable like gold, silver, then moved to a paper currency, which was then evolved so that the volatility of gold could actually be controlled. Now, at the same time, these digital assets are not payment mechanisms. These are tradable commodities. And once you're working with a tradable commodity, it has to be volatile in nature. If it's not volatile in nature, then traders are not making money, investors are not making money. And if it is not volatile, you yourself would not trade into anything which is stable. So for payments, you will need to create stable coins. Stable coins have to be the means of payments and mechanisms. You have to understand how much of your portfolio you need to convert into stable coins for transactions or making it as a use case, and how much of your portfolio from stable coins or your net worth of physical money should actually be converted and traded into the market into these digital assets. Now, I may not be the right person to advise you on trading or these things, but from a technology perspective and from a layman perspective, we need to understand that Bitcoin, Ethereum, these coins are not payment mechanisms. These are tradable commodities, and we have to use them as tradable commodities. The more volatile they are, the more beneficial it's for the economy, and it's more beneficial for the whole ecosystem in itself. For payments, I think we should look at stable coins as a unit of payment, or any utility token that is derived in a particular ecosystem for the need of payments, then that should be considered as a payment token.
You can't control how the volatility of other volatile assets like Bitcoin, Ethereum, or the likes, because they are very volatile. So the best asset to use for payment should be stablecoin. However, if you choose to use other digital assets, I think the best is to use a payment gateway platform. They have a mechanism in place that will help them to convert your volatile asset to stablecoin as soon as you make the payment. So the best way to go about it is to use payment gateway platforms.
I would see it a bit more differentiated because not all cryptocurrencies are the same. Some cryptocurrencies like Bitcoin, I would see in the future more really like a commodity, and it's like tradable, like gold, for example, because it's not endless, so it has completely different factors, let's say, or behavior. Yeah, or if you just compare it with Ethereum, for example, or with US dollar Tether or whatever. But I think regulations will bring a lot more security in the market, and the reason for it is very, very simple. If you look to Elon Musk, if he say, I buy and sell, and the market jumps up and down, if this would be a regulated market, and he would say this, he would go, unfortunately, into prison, I would say, because it's a high market manipulation. And we have at the moment the same, and this is what we see, that the market, beside all the economic criteria, what we have, all the market environments, what we have a very high penetration and a very high market manipulation in the crypto market at the moment. So I think this will take out over time, and also with more regulations, yeah, and then I think also that's get a bit more stable. But at the moment, yeah, I would agree, it's a very volatile market, and everyone who is investing in crypto or cryptocurrency must be aware about it. So for that reason, I never would recommend to anyone put all your money in cryptos and then let's see what's happened. Yeah, so because this is speculation, you also would not put all your money, let's say, if you go to Monaco and you play roulette, you also not put everything on one color or one number. Yeah, you can do it. Maybe you're happy. So these are the speculators. So they're trying to be happy. All other, but if someone gets happy, everything must be balanced. Other ones has to lose something. Yeah. So because this is also not endless, and this you have to understand. And from that, my recommendation would be: don't be naive, as you said before. Yeah. Think about it. But I think today, it doesn't matter family offices or institutionals, and you see this already, they have already an allocation in crypto assets. And I'm sure in the future, in the S&P 500 in the US, there will be also like a part blockchain, and there will be also some companies listed. Just because the technology goes forward, and technology is always before regulations. And I just think we are still in a very early stage of the adoption of the cryptocurrencies worldwide. Yeah, but also we have to think about the advantages of this. It's just we look to emergency markets like Nigeria and other ones. They don't get a bank account. Yeah, so the only way to do payments for them is during cryptocurrencies or digital currencies. And I think this is the way to go, because we have to include more people in our world's economic system and not less.
Thank you so much for your answers. It's been really so informative and important discussion, and I wish we have more time. No doubt that new developments are coming, and UAE has always been and will be the leading country to implement the new technologies. Thank you once again for coming today, and we will see you next Friday.